Do you want to know what the most important factors for the financial markets are going to be in 2025? Well, we've got you covered. Let's dive into it. Now, before I get into the 2025 market outlook, just a reminder to hit the subscribe button because, hey, it's a new year, but many of you aren't subscribed. And if you're new to us, go check out our website. We'd love to hear from you. All right, so the first topic that we want to discuss as it relates to 2025 is the jobs market, because this is very important. In 2023 and in 2024, a lot of economists were calling for a recession. And what they missed was that the jobs market was so strong, and we pounded that fact in our videos. And here in 2025, we can tell you the jobs market is still very, very strong. The first chart we're going to put up is monthly jobs added, non-farm payrolls. Just last week, we found out that for December, 256,000 jobs were added. And if you look at this, 3 of the last 4 months, very strong, over 200K jobs added. That is a very strong number, and that brought down the unemployment rate during this time as well. Now, next chart looks at job openings. It's called the JOLTS report, and we got a nice increase last month. This has gone from a couple months back, 7.3 million jobs openings to almost 8.1 million. And the important fact here is not just that it's increased. This number was supposed to keep dropping down to 7 million job openings into the 6 millions, and this has started going up again. So that's very good to see. There are more and more job openings being created. Now, the last chart we're going to put up on the jobs market is looking at initial claims for unemployment insurance. We put this up a lot. Last week, 201,000 initial claims for unemployment insurance. And if you can look at over the last 3 years, this has been in a tight range from around the high 190s up to the 250,000 range. The important factor here is that for 3 years, this has not broken out to the upside. A lot of the economists who were calling for a recession thought there would be 300,000, 400,000, 500,000 people losing their job and filing unemployment insurance each week, and that just has not happened. So when you put all 3 of those charts together, it's telling us that the jobs market is still in a very good spot. And listen, that is what has fueled so much consumer spending these last couple of years and is poised to do so again for 2025. All right, so the next topic for us today, we are looking at interest rates, and we got 2 different rates we're looking at here. The first is going to be looking at long-term interest rates on a 10-year Treasury bond. What you will notice here that I want to call your attention to is in the last 4 months, rates have gone from 3.63 to 4.79, and today they're at 4.8 as we're filming this on a Tuesday. That's a big move, and 4.8 is outside of about 1 week in October of 2023 is the highest interest rates have been since 2007. So this move has been notable for a couple reasons. Number one, market participants are expecting stronger economic growth, and that has driven rates higher. But the next reason is not as positive. There is so much spending from our federal government that the Treasury Department is having to issue bonds every day, billions and billions of these bonds, and investors know that that supply is coming, and this is where it is showing up. Rates have gone up. This impacts the economy, and one way it does so is looking at mortgage rates. You will notice that a fixed rate mortgage right now, a 30-year mortgage, is at 7.25%. That was sitting at, what is that, about 6.7%? About a month and a half ago, and in September of 2024, it was down near 6%. So there is a major difference between a mortgage rate at 6 and at 7.25 in a payment. So housing is become a lot less affordable with interest rates going up like they have recently. So we're going to be watching the 10-year Treasury. We do not want to see that rate get up and above 5% and stay there. That could be problematic for the economy in 2025. Now, the second rate we want to take a look at is the Fed funds rate. So the Federal Reserve controls overnight interest rates. They don't have any control over longer term Treasury rates, okay? What you will see here is that the Fed funds rate is sitting right now at 4.33%. It's in a range, okay, from 4.25% to 4.5%. But the effective rate's 4.33. The Fed cut rates 3 times in 2024. As we sit here today, investors right now are projecting that the Fed is going to cut rates just 1 time in 2025. If we go back just 3 months, those investors were projecting there would be 7 rate cuts. So there has been a major change in the last few months where investors say, hey, the Fed is going to be keeping rates higher for longer. We're going to be watching this closely, and you will want to watch our videos as we go along to keep you updated on what's happening here. So our next topic is one of my favorites this time of year. It's taking a look at what do Wall Street strategists have as their price target for the S&P 500 by the end of 2025. In other words, what do they think the stock market's going to do this year? Now, I say this is one of my favorites because almost every year that we do this, we look back at the end of the year and the strategists have all been way wrong is typically what we see. In fact, in our last video, our 2024 recap, we did just that. We looked at where the Wall Street strategists had thought the market was going to go, and none of them got close to predicting that. And listen, it's a very hard thing to do, so we understand that. But when you put this up and you look at right now these Wall Street strategists, and there's I think 15 or 16 of them here. Most of these firms you've heard of, the Wells Fargo's, Deutsche Bank, Bank of America, Goldman Sachs, JP Morgan, all the big names are here. Right now, the S&P 500 is a little bit under 6,000, around 5,900. You see that there in the very bottom. And as you work your way up, you will see that most of the strategists are there in the middle. 6,500, 6,600, which is about an 8%, 10%, 11% gain. 8, 9% is kind of the historical number. And so a lot of these strategists just use those to make their predictions. But we've talked about this in the past, is that the market almost never has a gain of around 7, 8, 9, 10, 11%. It normally is a lot more than that or a lot less than that. Right now, most of these strategists are all in that range, though there are a few that have stepped out and willing to be a little bit different. Cantor Fitzgerald down there at the bottom expects the S&P 500 to be right about where it is right now at the end of the year. And up at the very top, you will see Oppenheimer has a target of 7,100. Wells Fargo and then Yardeni Research, they're in green there because they're the firm who put out this chart. They're all up over 7,000 for the S&P 500. So they see a pretty darn good year for the markets in their projections. So again, we will at the end of this year look back and show this chart and see how close these folks were this year in their targets. But like we talked about in the past, a lot of times they're way wrong. We want to take that into consideration. So our next topic, we are looking at small businesses. And listen, the last couple of years, the economy has grown faster than most of economists have projected. But there was one segment of the economy that was left behind in a lot of cases, and that was small business owners. We are looking today at the NFIB Small Business Optimism Index. This has been going on now since the 80s, and they ask over 10,000 small business owners every month a series of questions. The first is, how do you feel about your business in the coming months? And the Optimism Index we talked about last month, it grew, it had the biggest 1 month jump in its history, okay, in November. Now in December, we just got those numbers today, actually. Another 3-point jump up to 105. This is the highest level since 2018. Small business owners feel good. And in fact, if you look at another measure, if you ask them, how do you feel about business conditions, aka how do you feel about the economy going forward? This is at its highest level with this big jump you can see on the far right there that it's made over these last 2 months. This is the highest level since 1983. That is pretty remarkable. And listen, this is very important because these small business owners, when they feel optimistic, when they feel good about the economy, that means that they are going to step out and hire more workers. They're going to give raises. They're going to take on more projects. It's very good for the economy when these people are optimistic. And so when you put those two charts together, you can say, hey, this is very positive for 2025 and the economic outlook, because if we get the small businesses really starting to participate, that is very good news for the investment outlook. Last, we have rapid fire. We're going to look at 4 different topics that you need to know about as we go into 2025 here. We're going to start with looking at where economists feel economic growth will be for 2025. And this shows the evolution over the last 2 years. I want to focus on since October to today. You notice that this has been trending up. Right now, economists are forecasting a 2.1% growth rate for the economy in 2025. And to give you an idea, 3 of the last 4 quarters, the economy has grown at over 3%. We believe that for 2025, growth rate will be higher than this 2.1%, that economists will continue taking that higher as we go through the year. Next topic, earnings per share. And this matters because, listen, in the long run, stocks follow earnings. And so if profits are going up, stocks over time are going to go up as well. We're going to focus on the 2025 estimate, which right now, $273 predicted for companies in the S&P 500. That is growth of about 12% for profits over the 2024 numbers. We would like to see 12% or even better growth in earnings for this year, and we think there's a very good chance that's going to happen. And if so, again, that can be a wind behind the back of the stock market in 2025. The third item here in our rapid fire, taking a look at investor sentiment. Listen, we did a video that I think was published on December 19th or 20th. We had filmed a couple days before where we talked about the fact that the stock market had become too frothy. There was too much excitement. Everybody was on one side of the boat. That hasn't happened many times these last couple of years. More often, the case has been the opposite of that. But we said there's a lot of froth, and when that happens, many times you get these sell-offs that come out of nowhere, and that's exactly what we've had over the last 3 or 4 weeks. Well, good news here, a lot of that froth has come out of the markets, and we're looking at investor sentiment. This is a poll that asks investors, how do you feel about the markets? Bullish, bearish, or neutral? And you can see the percentage that is bullish is at 34%. That is down a lot from over at 48% just a few weeks ago, and this was even higher a little bit before that. So what you want to see at extremes, this becomes a concern, and if they're at extremes and they're very bearish, that's when we want to do a lot of buying. But right now, a lot of the froth's come out of the market these last 3 weeks. This is good news for markets, and for right now being a buying opportunity potentially in the markets. We like to see that a lot of the enthusiasm is gone. Last topic, Bitcoin. We saved the controversial one for last because, listen, this generates a much different response all along the, we get all kinds of different responses from clients on this topic, and for good reason. But we're putting up a chart that takes a look at Bitcoin these last 3 years. What I want to point out is that in 2023, over there on the far left side, from March until October, Bitcoin just went up and down in a range there for 6-7 months. And then from November up through the end of February, a significant rally from 30,000 up to 70,000 in Bitcoin. It went straight up. Then in 2024, same time frame, from March through October, Bitcoin up and down, and was lower in October than it was in March, just like it did in 2023. And then another big rally kicked off in late October, early November, just like in 2023. And we saw Bitcoin reach as high as 108,000. Now today, it's in the mid-90s. It's pulled back, not a surprise. It had gone so far so fast. And again, there had started to be concerns that there was froth in cryptocurrency here. So we put this chart up because, listen, in the next administration, they are going to relax rules on cryptocurrency, and it's going to start with the head of the SEC. Gary Gensler had been the head of the SEC. He was not a fan at all of crypto and of Bitcoin. He is on his way out, and so it's expected in the months to come there's going to be positive news stories around crypto, and that could fuel crypto going higher. But again, it's something to keep an eye on because, as you can see with this chart, it can have long stretches where it does very poorly, and you have to understand that if you're going to own any of it. Okay, so to recap, we talked about the fact that 2025 and where the markets go will be dictated by what happens in the jobs market. Right now, it's very strong, as it has been the last couple of years, and it has powered consumer spending. We talked about interest rates. The last few months, rates on long-term treasuries have been going up and are at near 18-year highs. We don't want to see them go above 5% and stay there. They will do things like cause problems for the housing market. We looked at Wall Street targets for the stock market in 2025. This year, most of the strategists believe there's going to be a gain, but most of them believe the gain will be 8 to 12%, and rarely does the market follow that path. And then we looked at small business owners. They are super optimistic right now. Their outlook on the economy is the best that it's been since 1983. When you add all these up, we're starting 2025 from a good place, and we believe it's going to be a good year for the markets, but it won't go up in a straight line. You'll want to come back, watch our videos. We will guide you through all the things that come the market's way in 2025. Thanks for watching, and take care.